Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 29th of January. So I've seen some pretty good moves this week on a few of the majors and some of the key indices as well. So we'll jump straight into the markets and see if we can identify some of these key levels and see if we can find some trades for today or early into next week. So we'll start out with the Aussie USD as we always do. You can see here that we've got a pretty weak sort of week all around really. Every day has been pretty negative from the peaks of last week. You can see that it's been meandering down, eventually broke the 20 moving average, which has held it up for the best part of 3 months now. So you can see that's a very key break. That candle pushed down, closed below it. That was our signal to go short. And you can see, although we've had a pretty big reversal off the 50 in that particular day, that all happened in the New York session. So it was looking very, very ominous about 12 hours ago. We'll keep an eye on this one. But the thing is, when you see a trade like this, it's really important to identify the opportunities inside it. Like you can see, I'll draw a vertical line on the day in question. So you've got that big red day there. If you ever want to know how to get into that, especially if you're trying to scalp, what you want to be doing is going to a 15-minute time frame and trying to isolate the trades from that. So you can see here, this is where that candle closed effectively, the big red candle. And although it looks really hard to get into, you can see that there's been many opportunities just by simply trading the 20 moving average on a 15-minute chart. You can see, I'll just unclick that one for a second and I'll move it over. So you can see from the standpoint of that big red close, you can see how many times it came up and touched the 20 moving average. Every single one of those was a selling opportunity. So although it looks like a big doji candle and you think, well, how would you even trade that? When you go to the smaller time frames, once you've got a bias, and by that I mean, we know on the daily here that this is a candle that broke the 20 moving average. So we know we've broken a very key zone and we're looking for shorts. When you go to the smaller time frame, that's where the shorts present themselves. Okay, so you can see when we go all the way to the front of the chart. Okay, I'll take that off. There it is there. That's the line that we closed on. And all of these are opportunities to actually short this and get involved. So there's about 5 or 6 really good opportunities to short in that particular period that looks ugly to trade. So really important that you actually look for the right time frame to achieve what you want to, in the time frame that you're looking for. So if you see a move on the daily and you're trying to scalp, go to the 15-minute one and you can basically trade the pullback to the 20 moving average and you can get in some pretty good trades there. That was gave some really good opportunities for several chances to at least get 20 to 50 pips on the scalp on the way down. All right, we'll move on to the US Dollar Cad. This one here is still showing really good signs of strength. Like we had that morning star pattern that you can see highlighted there. Blow that up a little bit. You can see it's a really good morning star on a very important support level. We've been talking about that for a while. It's done nothing but go up since. You can see here that we had the close above the 20 moving average, the all important one, because it has been really held back from this standpoint. Now that it closed up there, had a really good move up. We saw some weakness towards the end of the session, like a lot of the major currency pairs, but yeah, again, this is still looking really strong. And the MACD, you can see, is really playing the game, not very far off crossing into the above zero territory, which is going to be very strong for this one. A lot of what's going to happen here is going to depend on, what happens to the dollar index, of course, but this is a bit of a similar story. If you actually miss that pattern, and I mean, this pattern's already played out now, the take profit's already been hit, so that's all fine. But if you're getting involved somewhere around here, once you get that break over the 20, it really is as simple as going to a smaller time frame moving average, and there it is again. You can see right through there that even though it looks a little bit hard to trade because it looks so strong, the 15-minute pullbacks to the 20 moving average were there right through. You were able to take advantage of the long position all the way up to the most recent trading, which was late into the New York before it started to fall off and break down. So like I say, don't ever be afraid to look at the bigger time frames to actually isolate the trade and then go to the smaller time frames to actually trade it using the moving averages, 20 in particular. Okay, the US dollar Swissy is the other one we'll have a look at in the dollar-based pairs. You can see here the inverse head and shoulders that we've been talking about for quite some time now is still failing to play out. It's still there. You can see that the MACD is still playing the game, but you can see it's a lot of rejections off this level. There's a lot of congestion happening here. We know it's a very strong level here at this point, so it's going to take a little bit of breaking. If it does, it's got some really good potential to get to the effectively what we're aiming for is around this level here. That's the previous support level. Okay, it's a pretty shallow inverse head and shoulders, and that's pretty much the target that you'll be going for if it does break there. But yeah, the thing is, it's almost trading it like a scalping opportunity more than anything else. It's certainly taking its sweet time. We've been talking about it for a whole week and hasn't really done anything. And you can see all of these wick rejections off the 50 moving average and off what would be the neckline projected forward on this inverse head and shoulders. So it is a little bit of a wait and see on this one. It needs to break before you trade it. But when it does eventually break, if it does break and close above it, it does provide a pretty good opportunity to get to the level that was previous support. All right, so we'll move on now to the dollar index. This is pretty much painting the same picture as the US Swissy, but probably with a little bit more strength. You can see that these candles are a little bit more defined. The inverse head and shoulders is also still there. The MACD is playing the game and it is literally crossing above the zero now. But most importantly, price is hovering above the 20 moving average and it's able to hold up there. We want to really see this hold up for the rest of the week. It's very, very important that the weekly candle closes above and the daily will finish above the 20 moving average to really verify and lock in the strength that we've seen this week from this particular dollar index. So what we're looking for, again, the targets are very clear. If it does get the inverse head and shoulders, that target is effectively going straight into this previous support zone, which is around that sort of 92. And if the inverse head and shoulders breaks, that that projection of that pattern will definitely be in play. You can see that we had a very similar pattern to the Dollar Cad here. With the morning star. This is not as a prettier morning star because the star itself was nearly as long as the body, so it's not one that you'd certainly be raving about, but it was there nonetheless, and indecision is really what we're talking about here. As much as it is a pattern, what we're looking for at a very strong support zone is a price rejection, which is exactly what happened here, and the price reversal. So it's all about the price action, really. Even though the pattern is not extraordinarily pretty, the price action is telling us that the support did change, held up, and the momentum kicked up. Very, very important that this does hold up above the 20 to consider the dollar strength to be really, really valid for next week. So certainly one to watch, not one to trade, but we need to keep an eye on this one, obviously, for the dollar-based pairs and also the Euro USD. So we'll jump into the Euro USD straight up because it's obviously the inverse of that particular dollar. And here we go. So we can see it's effectively doing the same thing. The 20 moving average has maintained its resistance all the way through this week. It's had a decent go almost every day of this week to try and push past the 20 moving average and fail to close above it every single time. Now, price is hovering between the 20 and the 50, so it is starting to get a little bit trapped. But for mine, the MACD is very weak here. It's about to cross below the zero line, which is the opposite of obviously the dollar index. And what we're looking for to actually trade this is the close break below these levels. Like we want to see a level, a daily close below the 120.60. If we get that, then the 120 should be nearly a formality from there because it's going to gravitate towards that very key round number and very strong support zone. So as much as it's still only a scalp, it's reasonable to assume that it's only a scalp until it gets there because it doesn't have any really clear direction past that point. You would expect the 120 is going to be very strong support for it, but it should be able to get through this level, especially if the dollar index kicks up and does that inverse head and shoulders for us. As much as this is not as pretty a pattern as the inverse head and shoulders on the dollar index, this is probably the better trade because this will definitely get to the 120 if the dollar index breaks up higher from that inverse head and shoulders. So keep an eye, a very, very close eye on this one. What I like about this trade is although it's it's reasonable, it's not a big take profit, but it's not a big stop loss either. Okay, this is a pretty, now we're getting congested price action. The stop loss is not going to be extraordinarily large, so you should be able to get the scalping opportunities inside it. Again, if you're looking for that entry point, go to the smaller time frames and look for the changes of trend. So once you see price gravitating down here, go to a 15-minute chart and trade the pullbacks to the 20 moving average, and that should get you in at pretty reasonable levels and join in the momentum, because that's what you're really wanting to trade. You want to see the momentum on the daily and then jump in and actually get the trading opportunities on the smaller time frames. The 1 hour is probably just a little bit too big a time frame for that, so you want to stick to the 15-minute because you are looking essentially for a scalping opportunity on this one. Okay, the pound USD is the one that's probably the strongest that is against the US dollar. So you can see the euro was a lot weaker, the Aussie was a lot weaker, but this one's been able to maintain its ground, and it's not really far or very far away from its highs that it did only a few days ago. So yeah, you can see that the 20 moving average is held. This is the only one of the majors against the US dollar that's actually been able to maintain price above the 20 moving average. So it's really signifying how strong this has actually been right through. And as you can see, I mean, it's not very far off its highs from recent days. So this is probably insane. That's probably the hardest to trade. So even though this has got the most strength, it's going to take a really, really big push to break to a new high. And breaking to a new low, there is the support below it is obviously holding it up. So it's got a lot of work to do to get below the 20. Even that big price action of the week that just happened has failed to break through. So it's got a lot of strength at this level, but it's got a lot of work to do to break to the high as well. So this is probably the most difficult of them to trade because the range is really, really small. Now, this whole range, even of this week, has been under 100 pips. And for the pound, generally you're going to get bigger movement than that. You usually get that every day. And this has been able to maintain that sort of 100 pip range for quite some time now. So for mine, it's probably just a wait and see until it actually does something. It either needs to close above this level on a daily, which at that point, you'd be looking for long positions after a change of trend, or to break the 20 on the way down. So you want to see a close of a daily candle below the 20 moving average, which is hasn't happened in a while. And then you'd be looking for the shorting opportunities to probably that sort of 135 level, which is this area here that you're seeing where it was previous resistance and a little bit of support on the way down. So two ways to play it, but neither of them are presenting right now. I think it needs to do something before we jump on board on that one. All right, the US 500. Okay, this has been that was a big star of the week. Big sell off only 2 days ago. You can see that it tried to get back a lot of that last night's trading, but it did close significantly lower. Now this happened in the last little bit of trading, so it did happen in the last hour or so of the New York session, because it was basically trading up around this level at about 4 a.m. this morning. So it certainly did pull back. What's interesting though is that this is the first time that it broke below the 20 moving average on the daily in a very, very long time, as you can see. And when it did break and the next day traded, it did actually come down and close below it. Very, very interesting price action to see what happens from here. If the 20 moving average can keep the price below it and close here tomorrow morning, so close the week below the 20 moving average on a daily chart, that's going to bode pretty good for the shorts on this one for early next week. So it's really, really important to monitor how this one closes, because if it does close below the 20 moving average tomorrow morning and starts there on Monday, the MACD is obviously starting to shift the signal lines out of the histogram now. So the shorts could be potentially in play. We are looking for that close below the 20, and if it does that on the daily chart, it's going to open itself up to getting down to that 35.50, which is a key target zone for this particular one, which is effectively a couple of 100 points away. So really good trading opportunity if it does it. But again, if price pushes up above the 20, you're going to be looking to probably test the new highs again. So it's a wait and see on this one. Let's just see how New York plays out tonight and today's trading, and we'll look at it with fresh eyes on Monday to see where it plays out. But if it's under the 20, we'll be looking for those shorting opportunities on this one. All right, so I hope everybody's had a great week's trading and was able to take advantage of the volatility. We should see some pretty good action continue on into next week. So hopefully we'll get those scalps and some of these big levels will start to break, and we'll see some trends starting to kick off on some of the majors. Have a great weekend, everyone, and I'll talk to you next week.